So I don't know. I know Ken is in Georgia. Georgia has the strangest weather, y'all. I mean, it's crazy. So how can you go from snow on the weekend to torrential rain supposedly coming up sometime this week to it's 52 now, and it was 18 degrees over the weekend. Unbelievable. I mean, you don't even know how to dress when you go outside. It's just strange. It's very, very strange. So I hope you all had a great weekend. So let's get into it. I won't keep you long today. We'll do our thing, and then we'll just. I need a nap. This daylight savings time thing is for the birds, and they don't do it in Arizona. So why are they so smart, but we're so dumb that we still do this daylight thing? I mean, we need to keep it like it is right now, where we have more daylight in the summer. I like that. And let's don't go back and fall back in the fall. Let's just keep it like this. Let's just, come on. It's 2022. I understand that people used to have to be in the fields or whatever they were doing, but enough of this. And I know people say something about the kids getting on the school buses or whatever. Kids don't even ride school buses anymore. My kids don't ride school bus. I mean, it's just, it's crazy. That has to make 2 trips to take them in the morning. So, all right, so let's get into it. The market is bipolar today. The E-minis are up. They're flat, really, just flat. And we're down 1% on the NASDAQ. So E-minis, we are right below the overnight low. We're below the VWAP. We're below cash open. We're in the opening 15-minute range. We tapped a little, what do you call it, pivot point here. AD is starting to go down, down, down for the rest of the day. So I anticipate this to keep on going down as the AD is doing. Let's see what our little, what do you call it, looks like. Oh, man. Let's save my thing here. Now I need to detach this. Detach, Bob. All right, now I need to save it. So let's look at our E-minis. We are, what are we? Fairly priced. Fairly priced. And doing just like we thought we'd do. Hanging out right here. See, that is resistance, and we're fairly priced. So what do we think we'll do? We'll probably go down to the 50% line on our fair price thing. What's price all to go down to the 4082 on the E-minis. Not surprising at all. All right, let's look at our NASDAQs. See what that looks like. NASDAQ is right at its 50% fair value. So everything's fairly priced. No surprises. All right, we got all that. The looks like we're 160 on the screwdriver. Let's see what that looks like. 160 screwdriver. Wow, look at that. I don't know why it's going up with the market. Well, the market's flat, isn't it? So 3, 14, 22, 160. Interesting. We're hanging out there, baby, hanging out there. So we expect it to normalize. We just don't know when. And it's a wacky, wacky market. So, all right. So what are you going to do, Bob? What are you going to do today? Well, let's see. Market goes down. Market's doing its thing. Now, here's what we've got. Let me make sure that's in the right account here, 203. So in this account, we're down $2,300 today. We are taking a bath on our TMF shares, just a bath. Now, the good part about it is that means our will cover calls are doing okay, but that's just, it's not good. Not good that we're taking such a bath on those. You would hope that our other stuff would be up pretty good, but it's not. So we've got the call side RIT trades. I've got 2 of those on today that will expire totally profitable. So they're already at 100%. So we'll let those expire. They're cash settled. So we'll just take our 100% profit on those. And then what we'll do is I anticipate doing another SPX trade today going for Wednesday. So what's that going to look like? All right, that will look like, I said that will look like, We go out now 2 days, and we're going to put them on the call side. Let's see what that looks like. And looking at what I'm looking at the charts, right? The charts may continue to go down today. Maybe a good time to go ahead and put one on. I'm not sure. Let's see what we could do. So let's see. If we were to go, we've been able to go way out to collect a dollar, right? So let's just look at it. Let's see if we went to the 16 delta, 16 probability of anything. So we could do, that's the 4305. And then we go and buy the 4325. Let's see how much of credit we could get there. Look at there, y'all. $3.15. Now, I'm probably looking for $1, but I had this thing that I need to talk to y'all about over the weekend. Remember on Friday, I was talking about by putting it in on the call side, it's really a riskless trade. Y'all remember my conversation about that? And the riskless trade thought was that if I put it on the call side, I've already got so much positive deltas that even if I went to max loss on the SPX spread, doesn't matter because I still be making money. Was that the case? I'm not exactly sure. So let's do this. Let's go analyze this trade. Let's just blow it up over here and see what we got. So let's see, we're going to hide positions so that we just see our simulations. We'll delete this one. So we're just going to keep the one that we got here. So right, so hiding positions, this would be our little trade that we're thinking about putting on. If I got a $3 credit, let's see what would happen. So if the market goes up here, right, the market's up to 4306. Looks like that's around our break even, right, for Wednesday. If it goes past that, we would lose. If we went up 5%, we would lose $1,300, right? That's P&L on the day. I don't want the P&L open. So here we go. We'll go to our break even. We'll go there. If we're here, our max loss would be 1690, right? 1690. Yeah, that makes sense. Get the $310 credit. All right, so if we go 5% in the market, we would get that. Now let's do this. Let's go hide positions. Let's go show all. Let's see what it looks like. Because I said it was a riskless trade, right? So this is 4 expirations. This is beta symbol SPX. Let me just look. Portfolio beta weighted. Well, I don't have everything checked here. Let me check all. I think it's weird, isn't it? See if I can understand what I'm trying to say to y'all. What is that? That's like a money market something, SPX. We got my TMS, we got my UPRO. The only thing that will make this possibly look bad would be my UPRO covered calls that expire on Friday. Well, let's just look at this. All right, P&L open. We'll go P&L day. All right, so here we are. If we start off with that, we got everything showing, right? So what happens if you go up 5% in the market? Go up 5%. So by the 15th or the 17th, I'm trying to just see, and maybe my mind's not working today because I did take my medications late, but I'm trying to see if indeed, if I'm going to be down or up on the trade. So let's see. P&L day here is 22.44, down 31.44, 47.83. But I know what I got to do. I got to take off my existing. I'm trying to see, like, if we go up, hopefully y'all understand what I'm trying to say. If we go up, am I going to lose money? So we got to take off our current call side risk trades, right? Got to take those off because those aren't working against me today. I can promise you those are not going to be in the money today. So we'll make money on those. So now let's see what it looks like. So here, now let's see what my price slices look like. All right. So it says you're down this amount today. Tomorrow you'd be down that amount, that amount. And if we went up 15%, I'd be down $1,500. Hold on. I'm still trying to figure this out. Still trying to figure this out. That's 314. I'm just checking everything. So there, P&L on the day. Okay, we see that because that's my portfolio that is down today. So if we move this up, just seeing what happens. That gets me better and better positive. See that? Yeah. So I'm 2,300 down today, right? And if the market were to go up here today, I'd only be down 457. So you see what's happening, right? So if you go up 10%, boom, boom, boom. So now I'm down 900. Let's see. And what's making that look bad, of course, is my covered call in my UPRO. And I can't ignore it. I mean, because I've got it on, right? But I'm kind of looking on my SPX to see what my SPX looks like. Now let's look at it. If I didn't have those covered calls in there, so it says you're down 2,500 now, what would happen if we went up 5%? That's what you're looking for, right? That's what you're looking for. Now we're up 3,800, even with my RIC trading. Well, what if you went stretched it all the way up here and you went, here? Well, you're up $11,000. Boom, to boom, to boom, you're up here. So what I'm trying to say is at some point, you can work these things out to where you go, you really do have riskless trades by, you're basically, how can I say this? You're basically using trades to scalp against your otherwise long core deltas. I think I made a coherent thought there. So what I'm saying is we've got positive deltas in the portfolio. We're talking about putting a negative delta trade on so that even if the negative delta trade gets blown out and the market just whoops on past your strikes, you're still making money because you have the tremendous positive deltas anyway. And that's what I want you to see. So the only thing is, though, is if it did go up 5%, right? The more it goes up, the more bullish we are, the more we make sense. So this is even including the hypothetical call credit spread. But then you got to go, well, I can't ignore the fact that I've got on 10 short calls in UPRO at the same time. So, I'm basically trying to look and see, what's my hurt pain point? Where can I put on a negative delta trade and be just fine? So I'm just seeing what happens to my numbers going up certain places. So where was my break even on my SPX trade? Let's go hide positions, show simulations. Where's my break even? So there's my break even is at 43.05. And let's see, this whole thing is the expiration. So 43.05, and my maximum pain comes if we, close down at 43. Max pain comes there, right? And the 43.32. So 43.05 is my 43.07 or so. All right, so let's go back and look at everything now. Show all. I go to the 43.07. Just want to see how we're doing. We're doing much better, aren't we? It's all positive, positive, positive. So by putting on those negative delta trades, you're kind of capping your upside if we were to get a big spot. But since we're fairly priced and probably going down a little bit more to touch that 50% line on our volume profile big green monster chart, that's why I'm thinking about putting in this negative delta Rick trade by selling a call spread. So I'm not sure. We'll see what we're going to do there, but I got some time. But if y'all got anything to say on that, I just think it's a cool thing, right? Let's say that you've got 500 positive deltas in your account, and you want to do a short-term trade against those positive deltas, because my assumption is and has been that we're in a bear market. Every rally is getting sold off. So I am more attuned to putting in a call spread trade, very short term, against my otherwise long deltas. So let's see this again. So we're make sure what we're taking out. We're not taking into account the trades that will expire today, because there's virtually no chance those will be in the money by the end of the day, unless Putin gets a bullet through his head and the market loves it and shoots up. That's going to be just fine. So by putting this in conjunction with our TMF trades, our UPRO trades, looks pretty good. So then our deltas would go from, this is 23 SPX deltas, right, with everything. And without my simulated trade, it's 27.87. So that trade is giving me, so this is 270 positive deltas, and with my simulation, it is 230 positive. So you see what I'm saying? You still got positive deltas. So you positive deltas in your account. So if the accounts go up, you really don't care, because you're still going, even though you're losing money on the SPX call credit spread, you're making money on the account overall, which is kind of cool. That's kind of cool. So that's kind of trade that I'm talking about today. So, I mean, we can call it whatever you want to call it, but it's sort of a riskless trade. And it's the same thing that you could do in the futures market as well, right? So let's say you've got 270 positive deltas, then you could sell a micro future or two against your positive deltas if you are bearish for the coming couple of days, and still maintain all your positions. And if you lose money on your micro futures, you really don't care, because your account still got positive deltas. So if it goes up, you still make money. So it allows us to take a short-term directional bet on the market against an otherwise positive core position. So I hope I'm explaining that correctly. My mind's a little foggy today. Time change, all that kind of garbage. All right, but what I do know is that I want to put a 111 on today, if we can. Let's see what we got back on the charts. Let's go back to my zero. Let's just see what it's doing again. Yeah, so we're down just a little bit. So I'd probably put my 111 on the downside. So let's see if we can build it in Tastyworks in the macros. And again, I've got a 100% trade here as well on the SPX credit spread on the call side. Perfectly fine. And we will put on one before the end of the day. Just not sure if I'm going to do it now, if I'm going to wait toward the end of the day. All right, so let's go to the macros. Let's put on a little micro trade. Okay, and trade. And we're going to go close to 60 without going over. That's where I feel comfortable. Long put vertical. And we're going to split that 50 wide. Y'all know the drill by now. We're going to go down to a point where we can pay $10 for this spread. It's going to get hung. It's going to get hung again. 50 wide. Let's move her down until it gets 10 cents. She gets hung again. I gotta fix that at some point. That drives me nuts. All right, so that's 1250. That is 1175. And if y'all notice, I've still got them. I've only got one workout shirt, and I got another one coming from Amazon. It's supposed to be red, so then I'll have two workout shirts. But can you believe it? I did it this morning again, 5:30 in the morning. I was at that gym. I just knew my friend would say, "Oh, you're gonna back out, aren't you, Tubby?" I just, oh boy, I was there, baby. I was there. So let's see. That's selling one where I'm long one. So I don't want to do that. I don't want to sell one where I've already got a long. So let me move them back up. My strikes this away. 3870 that for 1025. That's fine. Let's try to get that little booger feel for $10 for 1025. Let me go up on it, aren't you? Aren't you? Please go to 1050. That's fine. All right. So then we can go down here and we can either sell something for 20 bucks around in this area. Right, it's a 10 delta. So that's why I see why Tom is, going, hey, you can do two at the 5 delta to pay for it. It makes sense and get your short strike way out here. What, down below 2 standard deviations? So we could go, about 6 delta and get $24. So we spent what, 1050 to get that filled. So 1150, 12 bucks, 32.10. I think we're perfectly safe down here. So why don't we do two of those to pay for that debit spread that we just did? And so that's going to take $644 of buying power. Two of those at 1175. And we're filled. All right. So let's see if we can put that in the other account. If we got the buying power, which is always something in the other account I've got to look at. And the reason I don't have as much buying power in the other account is because I'm truly doing the hedge fundies excellent adventure over there, where I've got 55% UPRO and 45% TMF. So I'm using 100% of my capital. So I don't have a lot to do a lot of options in the other accounts. So let's try to do that. Put that one in that account. I think that's the right one. So let's see if we've got any buying power in here to do a micro trade. Okay. Come here, little baby. So we're going to go 46 days. And we're going to do the 3920. Okay, so we're going to, let's say we're going to buy the 3920 and sell the 3870. Buy that one. Sell the 3870. And then we did the 3210. Let's see what that looks like over here. 3210. Yeah, I did a lot of thinking over the weekend about the riskless trade. I got to play with that some. I want y'all to play with it too, right? I want y'all to just play with that a little bit and think about it. Long deltas, scalp against it in a very short-term trade. So instead of using futures, we're just using a call credit spread against your otherwise long deltas. Makes a lot of sense to me. So we'll see see if y'all can make heads or tails of it. Now see how much buying power this is taking, if I got enough buying power to do it. Let's see. Yeah. Doesn't give me a lot, but it gives me a little, right? So it looks like I can do that. Let's try to put that in. I have to work it a little. Cancel replace. So you want to make it worse to yourself, right? So 1650, let's try 1625. There's a big spread between that mid and that. Maybe I need to just do it as come on, Bob. Come on, Bob, Bob. Maybe better doing two different orders like I did in Thinkorswim. What was the credit I got over here in that before? 1050 and 1175 credit. 22. Too much for me this early in the day. Let me move it up. Let's kind of get it in the middle there somewhere. Come on, feel me. There we go. We are in, baby. All right, so we got filled at 1450. So let's put that in a little group, shall we? Show groups. So let's see what we got. We got a BSH after hard. Let's BSH after hard. And you might be sitting there going, Bob, aren't you putting in BSHs in your fixed call hedge? I don't think it's the time to do those. I really don't, based on what the market's been doing lately, which has just basically been going down, 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 up, down, 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 up. I don't think it's the time, especially on the VIX side of doing the VIX hedge. You just can't do a VIX hedge when volatility is as high as it is. So I don't think it's the time to do that. So there's 11165th. There's my covered calls. 112 first. So there's a 112 second and a 112 on the call side. So this is a 112 third, I think. 112 third. Let's do that. 112 third. Move to group. Add group. Y'all can't see that. You can see this. 111 third. Okay. So that's the trade that I got to do. So y'all got to know that. Let's see how my covered calls are doing. 62% of $153 today, 270. Yeah, covered calls are been great in this newly established bear market on our otherwise very long portfolio. So it's about all you can do, other than I think that what I want y'all to do is to go to y'all's analyze tab. I want you to look at your overall deltas. I want you to look at your portfolio. What would your portfolio be if we were to go up some? And then place a RIC trade, which is nothing more than a credit spread on the call side, and see what you can do with that and play with it to see, hey, wait a minute, if I put that on and price blows right through it, is my account still going up? Because if it is, and we are in the bear market that I say that we're in, this is going to be really, really, really cool, because you can put on a trade with really no risk to the upside. And it's still a high probability trade as well. So that's the cool thing, right? Is to be able to put on a trade. So all we're doing is scalping, so to speak, with a 2-day trade, the RIC trade expiring on Wednesday, against an otherwise long portfolio. And if what I'm saying is correct, you can collect much more perhaps than $1 on a 20 wide credit spread. Maybe you can collect $3 or $5 or, $7 or $10. So just play with that in your own portfolios. And maybe after I go take me a quick nap, I'll wake back up and try to figure it out again before the market closes today. So any questions on that? It makes a lot of sense to me. Scalp against your otherwise long delta portfolio. So that's the key. Could we put on a trade that theoretically is a riskless trade? Now the trade may lose, but you'll be just fine in your overall portfolio. All right. That is all I got for today. Hope you have a wonderful, wonderful day, and I will see y'all tomorrow.